The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the October 30th magnificent Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be a pioneer of our future versus a prisoner of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone. You can dial in right now, 877-927-6648. And, of course, if you can't dial in, you can always let your fingers do the walking. That means you can send me an email, steve@tfnn.com. Just inside that heading, please put radio show question. And, of course, inside the Tigers Den, well, any ping will do. So let's go ahead and get this show started on Magical Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading off 77 points. 23,357 is the print. S&P is down 8. NASDAQ 100 up 10. Russell's off 16 points. That's a percent to the downside. Semis are flat. Semis are flat. New York Stock Exchange down a bit. The spot volatility index up 74 cents, about 7.5%. Gold is up 740, 12.79. Silver up 12 pennies. Light sweet crude up 13 cents. Leading the charts here to the upside, it is Capella Education Company, CPLA, up 32% or $20. Amazon's up 10. Charter Communications up 7. Strayer Education up 8 points to the downside. Priceline 17 buckaroonies. Credit Acceptance Corp, that's the old GMAC, off $8. Net Lease down 7.50. Chipotle down $7. Of course, I want to take a look at what you want to take a look at. I haven't looked at my screens since about 6:15 this morning when I sent out the 6:30 this morning when I sent out 6:15. 6 when I sent out the newsletter. So truly just jumping in the seat. So I want to understand what the markets are doing, just as you do. So here's where I'm going to start to try to get my head wrapped around, hey, what's the market doing? So the first thing that I want to take a look at is I want to take a look at the advanced decline oscillator lines for each of the indices out here. And that is the bottom panel of our screen for the first three windows from left to right, that being New York Stock Exchange, NASDAQ Composite, and the Dow. And the interesting thing is for each of these, we're down below zero. Even with the NASDAQ Composite even having made a new intraday high today, the advanced decline oscillator is still telling us, market breadth-wise, difference between our 39 and 19-day exponential moving average of advanced decline data. That's what that line on the bottom is representing. It's just telling us there is a huge divergence here. In fact, we can really kind of draw the line like this. So if you take a look at this chart here, you're going to see it's actually a bit long at the moment. Of course, this is where we started to see a declining top. You might, if you're just listening in, you're not knowing what the Sam heck I'm talking about. What I'm talking about is on the trading session of October 2nd. So we're talking an entire month here. That is when the advanced decline oscillator really made its highest high recently. The previous higher high would have been back here on September the 1st. And so we have seen a steadily declining tops type line of that tool, that indicator. We got below zero, or it got below zero on the trading session of October the 12th. still continues to be below zero. And when you see these type of divergences, they are a indication that there is some type of decline to come. Now, declines lately have been 45 minutes to maybe 1 day or a couple days out here in the case of the NASDAQ. So that is still in full swing below zero out here. And that has to make you say, something to think about. Now, if we take a look at the Dow, now what we have as we speak right now, 1:11 in the afternoon. I didn't really mean to do that. I meant to say keep it like this, where we could take a look at all three of these panels out here. Here's kind of like, going to the minute clinic, because you're with me for a few minutes, but we're just taking a look at this for a minute. And as we take a look at this, we're saying you got a cold. You might even need some penicillin or something along those lines. It's not a confirming signal when we see this uniformly amongst these three indices, each being below zero. Even with the Dow almost making a new all-time closing high on Friday, that tool and indicator ticked to the downside. So that was one of the first things that we looked at inside, or one of the things we looked at inside the newsletter this morning. The second thing that we looked at was a spot volatility index. We took a look at that, which is trading right now at 1056 versus the exponential moving average at 1048. So we're back up above the 50-day. Should the spot volatility index close above 1048 out there, that is where some carnage can be done inside the S&P 500. Now, we closed below that 50-day in a large way on Friday. We had a greater than or something south of minus 10%. And I did say to you, we went and looked at the charts there, that nearly most of the time is going to be 90%. There's a figure that we'll use. That type of day identifies an initiation move to the upside. Now, it still is a possibility, but it becomes less of a possibility here should the spot volatility index close above that 50-day line. So 1048 is the number. You're at 1055. I'm not saying to jump on a short train here, not at all. What I'm doing is trying to analyze the market with you so that you can anticipate what its next moves might be. And of course, it really depends on your time frame horizon out there. So that's the first place that I want to take a look at. And that's cool because in this one set of charts here, it gives us a really good snapshot of the New York Stock Exchange, which you can't trade. NASDAQ Composite, which you can't trade, but it gives us the Dow and the S&P 500. But the nice thing about the New York Stock Exchange, the NASDAQ Composite, we've got a fairly large market breadth out there to help us understand if there's trouble under the covers. Now, in the case of the S&P 500, and in fact the NDX as well, those are two indices that you can trade. Inside the S&P 500, the second thing that I would do, we did this last week, would take a look at what's the market breadth of the TAS market profiles, trying to understand how many issues are trading above the top of the box. That's where you're, in essence, above resistance. You have freedom to run to at least the next swing point that might be on the left-hand side of your chart out there. And if you're above all swing points, then you start taking a look at horizontal trading ranges, other tools like that. And the red line tells us how many issues are trading below the bottom of those boxes. Same thing with regard to where one could trade to. Now, in this case, as we speak, at 1:14 in the afternoon, what we have is 173 individual issues above the top and 160 below. So this still shows us positive market breadth. If you had negative market breadth, a close above the 50-day exponential moving average in the spot volatility index, and all of those other indices down below their advanced decline zero line, tells you there's more pullback to come. Right now, it's a little bit of a coin toss. Well, let's go see if we can improve that coin toss when we get back from this first break. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 67, S&P is down 7. So you and I are just really jumping in the captain's chair, Captain Morgan, that is, and just trying to assess what the markets are doing, what they're communicating to you and I at 1 o'clock in the afternoon. So we took a look at spent the first session, take a look at the advanced decline oscillator readings, as well as the spot volatility index. And now let's go take a look at the TAS market profiles. Let's go take a look at, I know we were taking a look at the S&P 500 market breadth. Absolutely still in bullish territory out there. And we can do this two different ways. And when you take a look at the equity futures contract here for the ES, Friday was a nice potential breakout move. So far today on the ES Mini, it's been a test of that breakout area. So the level that you're watching inside the ES is going to be 2560, let's just call it 2567. If you were to see a close below 2567, today's close, and you had access to the TAS market breadth, and it had a negative crossover on the daily chart, that's what we were looking at, then that would suggest to you that you should anticipate price would move back to 2549. Nothing more than really another normal level of support. When you break above resistance areas, whether it be because of a Japanese candlestick up at a high, or somewhere up there, or consolidation patterns, or in this case here, TAS market profile levels, it's normal for the equity, or in this case here, a futures contract, to pull back and test old resistance just to make sure that old resistance has changed polarity, meaning it goes from resistance to support. Well, thus far, that's what has happened intraday. So if you were short the market for some reason earlier in the day and you saw price getting back to 2566, remember, this is not where we are using these numbers as exact, but when you get down to the exact number, the hair on the back of your neck, the sphincter muscle, things like that ought to start to stand up or tighten up, so to speak, and would give an indication that, okay, maybe it's time to take a bit of profit. So that's inside the S&P 500. If we go take a look at the NDX 100, and we take a look at, in essence, the same kinds of things, here's our market breadth tool 40 of the issues above the box, 33 below the box, still bullish. 37 of those issues inside the box. There's one brand new box inside the NASDAQ 100 today, and with prices above a brand new box, and there's 6 where prices are below brand new boxes out here. But this helps statistically give you a feel for the market. So we're going to call this still bullish inside the NASDAQ 100. Now, you need to see a bearish crossover, and inside the NQ, Lord have mercy. I actually couldn't. I really couldn't. I could give you a target, but goodness gracious, it's 100 points below where we're trading, 61.23. So the NQ, you'd have to really find some other tools and reasons to go ahead and go short that. That's my opinion. I would be looking more at the ES numbers and the market breadth numbers, because those are more easily able to cross. Inside the Dow, we've just been trading sideways. Now, fortunately for you and I, brand new market profile formed on Friday. So it gives us nice new parameters to be looking at, which means that if we're just simply in a market that has moved higher, which we know that it has, it's just kind of exhausted. Not that Friday's move was an exhaustive move, could be, but right now that hasn't proven itself. Because, see, the Dow equity futures contracts are really just trading between a narrow range, has not tested the bottom of the range. That would be 23,161. The top of that is 23,436. So no damage, no problem, no big problemo until you see a close below 23,161. A close above 23,436, you know you have a breakout en route inside of the Dow equity futures contract. So as you and I take a look at the equity futures contracts, what we have here are really levels of support and resistance. Nothing here that indicates that there's anything that is out of order, so to speak. If we take a look at the Russell 2000, brand new box form today, the low of which has been tested, which is at the 14, the number here is 1491. So price has gotten down to that level. It's an equally distributed box, so it's neither structured from a bullish or bearish side out here. So it's just neutral, as is I really think the actual box is neutral as well. I see a message, Steve, that 25.42 from last week low, just below 45 is big to you. Yeah, I can. Now, the one thing, Jay, that was a message here from Jay, and there's no question about that, and he's referring to the candle session from the trading day of October the 25th out here, and that was the very first day of that market profile, and price did close right back above 25.49. So I know you're looking at 25.42. It's a bullish structured box, meaning the center of the box closer to the bottom than to the top out here, and what you and I really know is that's really strong support, or appears to be really strong support. So if that level were taken out, I can see why that would be big to you. Being big to you right now, you don't have to, but I would go with the presumption of information that it's big support. What would change my mind on that, Jay, and see, this is when price got down to the bottom of that box in the 25.49 level. Yes, it was down below that by another 7 points out there. But at the same point in time that was occurring, we never saw this bearish crossover inside of the S&P 500. This is a daily chart. Now, should you get that bearish cross, more issues below the box and above the box, I would have to say pretty good chance that 25.42 would not hold, which is really 25.49. So that's kind of how we would put together these tools, because you had strong market breadth when the bottom of a bullish profile box, in essence, was being tested out there. And at the same time, what really turned that 25.42 around, Jay, was when the NQ, because simultaneously as that was occurring out here, because I was watching it, I know, because I was trading around it on my intraday trades, what I was watching was the test. This is a weekly, so this was last week, when price pulled back to the top of that weekly profile. That was last week. That level is 6,004. The actual price got down to a low of 60.11. So just, kind of putting those tools together, we're indicating the market was certainly not ready to go ahead and fall apart. If anything, prices were just coming back to support out there. So that dynamic could change along this way, but I think you kind of use those tools to assist you with that. And then on a 30-minute chart, we got a leg G inside of the NQ, I think it was. So it's kind of a number of different patterns that we're setting up out there. So as we take in, as long as we are here inside of the weekly profiles out here, it looked like earlier this morning, I see that is not the case right now. Early this morning, the Russell was showing that it had was generating or forming a new weekly profile. That has now vanished. Sometimes that happens out here. It may reappear, but folks that are subscribers that are trading the Russell 2000, you cannot use as a benchmark those levels that were shown on that chart earlier this morning because they just simply don't exist out there. Might come back, but as we know right now, they just simply are not there. So hopefully that gives you a gist with regard to the markets out here, and then we'll go take a look at probably gold and stuff like that. I see a question: are you tracking the Fed Reserve shrinking its balance sheet begun this month? I am not, and I mean I am and I am not. But let's talk about that and some thoughts on that when we get back from this break. Let's take a look at the yen, gold, silver, treasury bonds breaking out to the upside.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So there was a question that was posted in asking if I was trying to keep track of what the Federal Reserve was doing, and the possibility of its shrinking balance sheet and what that might mean. And I have spent hours typically on as I'm watching football games Saturday or Saturday night, because I love college game day. So just as I'm kind of stopping myself from snoozing, watching the game, and just kind of looking for facts, I've tried to go back there and really figure out, see if I could come up with a tool that you and I could use out here to help us understand what type of impact it might have on the markets out there. And the problem is, even in trying to figure that out, it would also mean that we would have to say that the Swiss National Bank is something we would have to ignore. As an example, here is the numbers from the 10K that was recently filed with inside the SEC for the Swiss National Bank. Now, this is an order here, and this is in billion. Well, you got to add 3 zeros, but it tells you the holdings of the Swiss National Bank, what the approximate value is. Which right now is 1.1 billion in Apple stock. So the largest held number of shares, and it shows you can look this stuff up yourself, folks, and they give you this. Well, you got to go into the SEC documents in order to get that. There was a website that I found that showed they had already done some of the work and showed you what was being added, what was being subtracted, what was a new position out there. So, you're dealing with a delay of, maybe up to 90 days or something like that. But it gives you a good idea. What's interesting here is that their fifth holding, this was as of a month or two ago, a fifth holding was actually General Electric. So, not everything there, but it's long-term holding, perhaps long-term holding for these. But the thing is, if we were only look at our central bank, I think in order to really get a feel, we have to look at all of the central banks out there, and that includes Japan. So we know we've got active central banks that are in the equity markets out here. These guys are not buying the ETFs. That is not one of their holdings. When I say these guys being the Swiss National Bank, it's not. They're not. It's at least what I've been able to identify. Maybe somebody else out there has got some other information. I have not been able to see where they are holding futures contracts, ETFs out here. These are individual stocks inside of that. The other thing, maybe it's a question that you may have asked yourself. Like, why isn't inflation? Why haven't we seen inflation with all of the money inside that has supposedly been printed? It has been printed, by the way, by the Federal Reserve. I mean, doesn't it just the equity markets have moved up. They've taken the potential psychological benefit of that. And why haven't we seen inflation? In other words, why hasn't gold just taken off to the moon, or silver, or commodities just simply in general out here? The reason is, there's a very good reason. You and I, so if I'm boring you, hey, I apologize, and if I'm not boring you, then that's good. And the reason is simply, everybody talks about the $4 trillion balance sheet, where the Fed balance sheet has grown to, and Duffy says we're in a deflationary environment. But Duffy, what we do have to do is recognize that the Federal Reserve has increased its balance sheet substantially. It didn't start at zero, so the mere fact that we're at $4 trillion doesn't mean we started at zero. The reason why this is Steve-O's. Opinion. So we're in the opinion. That's not opinion. This is gosh darn facts out here. The reason is that money, it's mostly under the mattresses. But where the mattresses are is really inside the banks, because these are the excess reserves of the depository institutions out here. And what we can see is from 2009 forward, those grew from $400,000 to $2.8 trillion. So the money was being printed, but it was never getting out into the marketplace, which makes you think that whole 2% BS stuff about inflation, that the Fed says one thing, yet they are totally keeping down the inflation aspect of it. In this, you can see that since about this peaked in the early part of 15 or the late part of, well, I can tell you exactly. It peaked right here, August 14th of August in 2014, 2.7 trillion. And so this means that this had gone up about $2.3 trillion out there. So this unwinding what? You know what I mean? When I think that to really, you've got to be able to, in my opinion, and look, I'm a bean counter, so it's why I try to spend some time with these numbers to see if we can find some type of edge. And because I've always posed to you, is this time any different? The bottom line is, you and I know, going back into the 1800s, we know what pattern is available at the beginning of every bear market. We know that. It has nothing to do with the stars. It has nothing to do with the planets. It has nothing to do with the Cape Index. It has nothing to do with any of that crap out there. There's nothing to do with the Fed's balance sheet, for goodness sake. Those patterns aren't there at the beginning of every major bear market. There's only one pattern that has been present there. And so, but it's still kind of nice to take a look at this data to try to figure out maybe fundamentally how it all gets together. So I know that's a long-winded question, but there's a lot of cool tools here and a lot of listeners, so you can go out and you can take a look at that stuff yourself. This is that. Just go to the Fred Economic Research. Type in excess reserves of depository institutions. It'll get you. You can download all that data. You can go back as far as you want out there. You can download all the Fed balance sheet stuff. You can download all the Swiss National Bank, see what holdings they've got out there. They've got 10Ks that are being filed. So you can see, exactly what they are doing. Keep a big spreadsheet, and you'll find some site out there that is actually doing some of that stuff. So back to gold. Not that we really got there. Really back to the yen, because this is a market. If I say back to gold, we really are saying it's all about the yen, right? There's nothing to do with inflation crap. There's nothing to do with the U.S. dollar, with the exception of the fact that the yen is one of the components inside the U.S. dollar. It's all about the yen. It doesn't get any simpler out here. And if we take a look at what the yen actually did on Friday, it's a pretty cool thing. I wanted to, well, what it did is simply got down. Well, that's not it. That's another chart. Where did that other chart go? I hope I didn't lose it. Oh, it's right here. Here's what the yen did. You and I, for weeks, basically, were taking a look at this consolidation pattern. Excuse me, it's been going on since March of this year out here, and really right in sync. Just as we've seen when price has bottomed in this consolidation pattern, we've seen a bullish reversal candle. You saw the bullish engulfing candle. If you're watching us back in March, that cemented the bottom. You saw here in July a nice bullish engulfing candle. And what you saw on Friday was a nice little bullish engulfing candle. How does that work? Now, look, to be able to spot or identify a bullish engulfing candle is one thing, but to be able to identify it at a pattern completion, such as a consolidation, is a more important thing to do out here. And then today, this is what I wanted to see. The proof was, or is, or should be, that the yen is up above Stevie's red line out here. That says at the bottom line, price oscillator is turning up. Still could be counter trend rally, but you can see the other times when the yen futures have bottomed. Once price got above Stevie's red line, it was off to the races to the upside. So will this time be any different? And why does that matter? Hey, if you're holding gold, you're holding silver, you're holding treasury bonds alongside, or maybe miners, I'd say it's really important. Numero uno importance. Right.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A share bull and bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the Taz Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Hey, if you do have some questions, make sure you get them in and get them in perhaps early by tomorrow, because I won't be with you from Wednesday and through until maybe next Thursday, or it could be Friday out here. Just don't know. So I'll be away from the seat for a bit, taking a much-needed break and vacation out there. So, if you want me to take a look at something, best to get it in sooner than later. Now, we were talking about gold. Really, I was talking about the yen out there. And what we can see here by taking a look at these three charts simultaneously, we've got bonds on the left panel, yen in the center panel, and the gold contract on the right-hand side. Each of them, as we speak right now, are above the bottom of their TAS market profiles. 151.26 inside the Treasury bond, 0.8804 in the yen, and 1275.60 inside of gold. So what this suggests to me, because we took a look at the other yen chart, and in essence, if this time is like the prior times, the yen should just simply scream all the way back up to the top of the consolidation pattern. If that happens out here, gold should move back up to should continue to move higher along with the yen. So too should, because gold is so correlated to the mining equities, so too should we'll just simply call it the GDX, not each individual mining equity, and then so too should Treasury bonds. The first stop is going to be, assuming that prices are going to continue to move higher, first stop here inside of Treasury bonds is going to be 153. That's the next place. If you were going to try to short bonds, that's probably the place that you have to look out here. And I would say that that's really the reason. The chances are, if you are basically an intraday trader of bonds, what you want to be looking at is being long bonds right now, and you want to play it right up into the top of that box. You can see right now, this is assuming that prices close above Stevie's red line. We are above that as we speak. We're above the bottom of a daily profile out there. So everything is looking copacetic out here for Treasury bonds. Basically, I'm saying don't short bonds, at least right now. There's no message to go ahead and short bonds right now. 153, that could be a different story out here. With regard to the Japanese yen, don't short the yen. This is probably headed to, well, at least 0.89214 and more likely 0.89604. And if it closes, this is going to be the key. This is going to be the tell, because we know about the directional correlation inside of the Japanese yen. And I'm spending time with you right now because unless these profiles change, this is going to be good for Tuesday, Wednesday, Thursday, Friday, and you're going to be able to take a look at this, and you're going to be able to know what action to take if you trade those, especially short-term, intraday, whatever it might be. The reason why we're focused so much right now here on yen futures are because that brand new profile that's formed here 4 or 5 days ago is because this is a bearish structured profile. So we have a bullish reversal signal at the exact bottom of the consolidation. We are now back above the top of the bottom of a daily box, which is a bearish structured box because the center at 0.89214 is closer to the top at 0.89604. If you close above a bearish structured box, it just tells you how powerful the current move is that is underway. You just took out a large area where the snipers, where the bears, where the sellers should be sitting. And if that's the case, that's just going to be one more straw that's going to tell you that perhaps this time is going to be just like the others, and price then will run to the top of the consolidation, which is quite a bit higher, and that's going to assist you with any trades inside of T-bonds, inside of gold, inside of silver as well out there. And I think it's going to be the TAS market profile high in the yen futures that are going to be way more important than 153 or 1289.40 out here. So you want to keep all three of your eyes, that's the one in the back of your head as well, on yen futures. So I spent a lot of time on that, but I know a lot of you trade those vehicles, both the long end and the short side. And the cool thing is that the yen is the one that is ruling the direction of treasury bonds. It's ruling the direction of gold. It is, and then that gold is ruling the direction of the mining equities as the basket. Now, silver gave you a pretty cool pattern. Let me see if I can find it. I know I can find it. Just have to switch gears here. Silver formed a beautiful hammer candle on Friday, and it just simply has added to those moves here today. But the problem is, well, it hasn't added. We're actually back a bit. So what you really need to see with silver, high-ho silver, the Lone Ranger, you really want to see this close above 1690, 16.96 out here, because that's going to be Stevie's red line. So you got a hammer candle. It did not take out the previous low here in October, so kind of short-term bullish here. Let's just go take a look at silver's profiles. Give me a moment here to try to find those or get those established. TAS profiles long-term, yeah. So give me a second here to pull up silver. We'll see where those profiles are on the daily time frame. These are going to be more accurate than what it was that would have popped up on the screen on that last chart. So you're really looking for, so I gave you Stevie's red line number. The other level you want to see silver get into is 1692. I was sitting down, I heard Tom was talking about silver. I don't recall the number that he was looking at. He probably was looking at this swing point here from trading sessions of October 6th and wanted to see silver close above that, 1689. So I'm saying 1692. We're only talking about 3 pennies, but I think they're an important 3 pennies out here because you get back inside that TAS market profile, which that profile is even Steven, meaning it's not bullish or bearish. It's kind of a neutral profile. And if you can do that, then silver ought to make its way up to 1715, most likely 1738 right now. But silver gave you a really nice signal on Friday. We're just not seeing that type of follow-through in it that you'd really like to see. Although right now it does look like that what it's trying to do is form an A to B equals CD to the upside. Because if you take a look at the low out here on October 27th, that's your A point, your B point out here at about 3 o'clock on October 27th, and your C point, looks like I grabbed the wrong the wrong bar. Pretty close. But, there's your A to B equals CD. That should get you into the TAS market profile out there. So that's the makeup with regard to silver, the yen, and everything else that is out there. Now, I don't see any requests. So, Duffy made a comment here when I was talking about inflation. And his comment wasn't exactly, so I'm just kind of paraphrasing here. But what do you mean there's no inflation? Have you been to the grocery store lately? And you're absolutely right. When I was referring to the word inflation, it was in the context of money that is or isn't out there, and really with regard to those vehicles that we trade here. I'm not trading eggs and milk futures and things of that sort, but really just with regard to specifically, gold, silver, light sweet crude, maybe we look at, a few other commodities out there, not with regard to, because I'm with you with regard to the, so it's all in context. And I know that you know that, but I just want to make myself clear. Why? I don't know. Dow is off 64, S&P is down 8. And we'll be back for our last segment. Steve Rhodes with TFNN.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com. Educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. Request to go take a look at the NASDAQ 120-minute time frame chart out here and to take a look at the wave counts on it. And so I see that seventh wave move out here. That's when that occurred here during the last couple hours at 12 noon. And so far, you've got 6 minutes. So it's going to confirm a seventh wave move. That's the letter G out there. So the key here in the since you're trading or taking a look at the NQ is for me to go over here and try to give you, so as our last thing, just simply the NQ profile. So here are the, here are the NQ. Let me try to get this in a format that you can see. So I'm going to turn off the 240 and put this at 120 for you, so that you can just simply grab a snapshot of this, and you're going to have the 30, 60, 120, and the daily time frame, as well as the weekly profiles here for the NQ. So you can grab those. And inside the NQ, all I've really got for you on your market breadth would be, I've got the 1 hour, which turned slightly bearish out here at 9 a.m. this morning. And on the 240-minute chart, it just turned. So on the 240-minute, and let's just come back here, just simply to provide you with the information, since, and we'll just change this 120-minute. Oh, I have the 240. What the heck am I doing out here? I think we're going off the air. But here is the 240-minute chart, and you really need to see it close below Stevie's red line, which is 61.84. Otherwise, it's just kind of a retracement to the, back to a level of support out there. So, folks, thanks so much for being here. Again, tomorrow, if you'd like me to answer any questions, cover any topics or anything, get those questions in early. First come, first serve. No, we will serve all around here. And have a great trading day. We'll see you tomorrow on Terrific Tuesday. Bye now.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and